my name is Geoff Driver, General Manager of Business Development and Investor Relations at Australian Foundation Investment Company. I have with me today Ross Barker, the Managing Director and Chief Executive Officer of Australian Foundation Investment Company, to talk about the financial year results ending 2017. So Ross, what were the major highlights of the result for the year?
Well, the profit for the year was down about just over 7.5%. Some of that was dividends that we were reduced from some of the companies we invest in, but the other component was a drop in the trading income. And last year we had quite a few share issues that we didn't hold for the long term, but we took the value for our shareholders, and that came through as trading profit. So they were the main two items on the modest drop in profit. In terms of the portfolio, look, it's been a good year in the market, and the market was up quite well over 10%. I think our portfolio was up a bit under that, but we didn't have as much exposure to the banks and the resources as the broader market. The other component of our result, of course, is the dividend that we pay, and we've maintained our dividend this year at 24 cents per annum, the final dividend being 14 cents, which we'll pay in August. And we felt that we had sufficient reserves to continue to pay the dividend, even though the earnings per share was a little bit below that this year.
Ross, what were the key changes in the portfolio for the year?
It's been an interesting year in the market, which has been generally strong for most of the year, and that's meant that it hasn't been particularly attractive to be investing large amounts of money in the market, which we think is pretty fully priced. But we did put some more money into the market in selected positions. We added a new company called Link Administrative Services into the portfolio, and that's a company that looks after share registry, but more importantly superannuation, and it's got a very significant business in administering superannuation, which is quite important in the Australian context. Another company we added to was carsales.com. That's a company many of you would be familiar with that is used for selling cars in Australia. They're trying to grow their business offshore, and we think there's quite a lot of interest from that possibility as they deploy money into growing their business offshore. And then the third one is Isentia, and that's had a bit of negative publicity, but we actually think it's got quite significant interest to us over the medium to long term. It's a company that monitors mentions of brands and companies in the internet and in the press and on TV and radio and so forth. So it covers the broad mentions of brands in the media, and this is something that every company is actually quite interested in. How are they being mentioned and what are people saying? So we think that's quite an interesting place to be putting a bit more of our shareholders' money. We also topped up our holding in CSL. It continues to be a company we think is fantastic for medium to long-term investment. And we've had a position in the Clydesdale Bank, which we inherited from the National Bank. We've had it in the portfolio since it was demerged a few years ago. And as we've been looking at the prospects for that investment, we've also felt this was another place we wanted to add some of our investment. So relatively small additions really in the overall scheme of things, but these are some of the companies where we felt it was worthwhile putting some more of our shareholders' money.
So a question we're often asked, Ross, is what the outlook for the market is. What are your views at this point of time?
We're often asked by our shareholders and investors, what do we think is going to happen in the market in the next 6 to 12 months? Very difficult question for us to answer, because who knows what will happen, very much dependent on how the global economy works out and whether there's any geopolitical events such as wars or confrontations, those sorts of things. We're really concentrating on the medium to long term, so what might be happening in 5 and 10 years out, and that's the sort of time frame we put on our portfolio. I did mention that we think the market's reasonably fully priced, so we're not particularly wanting to put more money there. We think it's a bit expensive, so we're keeping our powder dry, as it were, and holding some of our cash in reserve for the times in the market when there's a bit of selling around. That tends to be how we like to invest. We're a bit of a contrarian investor. We like to be buying when more people are selling rather than chasing the market up. So that's our approach to the market. We're not sure that there'll be much change. It seems that there's a lot of money chasing investments at the moment, but there will be periods of setbacks, and that's our opportunity.